Nifty poised for a powerful bullish push with a strong upside target of 24469.22. Welcome to Trade Vision Pre-Market Report. Good morning, traders. Welcome to Trade Vision Pre-Market Report. Today, 2026, July 31st, Friday, another vibrant and positive trading day dawns. Let us deep dive into the detailed reports. The Federal Reserve kept its benchmark interest rate unchanged at 3.5 to 3.75% in a closely watched decision, though three policymakers favored a hike, signaling persistent inflation concerns above the 2% target. This move, despite ongoing price pressures and a September hike expected on Wall Street, leaves room for continued volatility in global capital flows, potentially influencing foreign institutional investor sentiment towards emerging markets like India. The US has implemented new Section 301 forced labor tariffs ranging from 10% to 12.5% on imports from 60 countries, replacing earlier global duties. While markets had some time to price this in, the broad scope of these measures, encompassing nearly all US imports, could introduce supply chain disruptions and trade friction globally, potentially weighing on export-oriented Indian manufacturing and related logistics sectors. Geopolitical tensions have sharply re-escalated between the US and Iran following retaliatory strikes, propelling Brent crude prices to over $90 a barrel. This renewed conflict raises global energy costs and intensifies inflationary pressures, which could weigh significantly on India's net oil importing economy, putting the spotlight on import-sensitive sectors and companies with high energy input costs. The Reserve Bank of India intervened significantly last Friday, reportedly selling approximately $7 billion across onshore and offshore markets to defend the rupee as it approached a record low, partly due to surging crude prices. This action by the central bank signals a proactive stance against currency volatility, which may lend support to rupee-sensitive sectors and could ease imported inflation concerns, keeping the spotlight on banking and oil import-dependent industries. SEBI has rolled out the Green Channel AIF rollout upon document acknowledgement Garuda mechanism, designed to streamline and accelerate the launch of alternative investment fund schemes. This regulatory easing, effective immediately, revises the filing and launch process for placement memoranda. The initiative is poised to enhance the ease of doing business for fund managers and may encourage increased capital formation in the financial sector, putting the spotlight on asset management companies and private equity players. The Department of Telecommunications and the Madhya Pradesh government are formalizing India's first telecom manufacturing zone, TMZ, in Gwalior. This initiative aims to cultivate a world-class domestic manufacturing ecosystem for telecom equipment, drawing investments and fostering indigenous design. The development could significantly strengthen India's self-reliance in telecommunications, potentially benefiting domestic equipment manufacturers and tech companies while supporting the broader Make in India agenda and regional industrial development. US Central Command confirms new strikes on Iranian IRGC targets following alleged Iranian attacks on US bases and shipping, with Saudi Arabia publicly joining retaliatory actions. Houthi threats to Red Sea shipping also escalate, driving Brent crude past $90 a barrel. This intensifying regional conflict could weigh heavily on global growth, spotlighting Indian energy-sensitive sectors and logistics companies. WTO Director General Ngozi Okonjo-Iweala warns that fragmentation of global trade into rival blocs, fueled by rising geopolitical tensions and retaliatory measures, could erase a significant 7% of global GDP over the long term. This cautionary outlook keeps the door open for sustained pressure on export-oriented Indian industries and manufacturers, highlighting global supply chain fragility. The US has implemented new Section 301 tariffs on imports from 60 countries, citing forced labor concerns. China swiftly expressed serious concern over these restrictions, warning against escalation. This renewed protectionist stance globally could weigh on Indian importers and exporters, particularly in affected sectors, leaving room for volatility in trade-sensitive manufacturing and metals. Global tech heavyweights Amazon and Apple reported robust earnings overnight, significantly surpassing market expectations, with Amazon's AWS segment particularly strong. This strong performance from key bellwethers is setting a positive tone for global tech, potentially lending support to Indian IT services exporters and broader market sentiment today.
You are watching Trade Vision! Smash that subscribe and enable the bell button right now. Like and share this video. Comment your love and share your happiness. Let's win together!
Foreign institutional investors bought a net 3,623.51 crore rupees. Domestic institutional investors net sold 1,864.03 crore rupees. This combination points to a net positive market impact today, driven by foreign inflows. If we look at yesterday's sectoral data, we see a clear rotation where Nifty IT and Nifty Auto are strengthening significantly, attracting capital with robust daily gains and strong weekly momentum. Conversely, money is moving out of Nifty Energy and Nifty PSU Bank, both exhibiting negative or sluggish weekly momentum, indicating a strategic shift for traders positioning today. Let us look at global events. The Reserve Bank of India's Monetary Policy Committee meets from August 3rd to 5th, 2026. The market expects rates to remain unchanged, impacting lending costs and the banking sector. The US Federal Reserve held interest rates steady on Wednesday, July 29, 2026 at 3.5% to 3.75%. However, 3 dissenting votes for a hike signal future tightening pressure, which could impact global liquidity and the Indian rupee. China's manufacturing PMI for July 2026, released today at 7 a.m. IST, came in at 50.3, beating expectations. This signals stronger global demand, which is positive for Indian exports and commodity-linked sectors. The U.S. Michigan consumer sentiment and inflation expectations for July 2026 are due today at 6:30 p.m. IST. One-year inflation expectations are forecast at 4.2%. These figures are key for the Federal Reserve's policy outlook, influencing global markets. The All India Consumer Price Index for June 2026 is an upcoming key event scheduled for release today, July 31st, 2026, around 6 p.m. Indian Standard Time. This inflation data will significantly influence the Reserve Bank of India's monetary policy. Global markets showed a cautiously positive sentiment. US futures and the Nasdaq gained, while European indices rose. Asia was mixed, with South Korea and Japan soaring, but China and Singapore dipped. Indian traders may see a supportive opening. Larsen & Toubro is highlighted by its robust Q1 results, featuring 14% net profit growth and new orders exceeding 1,08,000 crore rupees. IIFL Finance drew attention for a substantial block deal yesterday, where Small Cap World Fund Inc. acquired over 6.1 million shares. Sapphire Foods India also saw institutional activity as Fidelity Funds India Focus Fund purchased over 2 million shares in a bulk deal. Let's check what the RAS levels are saying about today's Nifty levels. For an upside move, the breakout level is 24,284, while the breakdown level rests at 24,265. Should the Nifty turn bullish, watch resistances at R1, 24,349, R2, 24,413, and R3, 24,478. Conversely, if the market declines, key supports are S1, 24,242, S2, 24,135, and S3, 24,470. Today's CPR levels show TC at 24,300, pivot at 24,282, and BC at 24,265. Analyzing the options matrix and derivative distribution, reflecting a pronounced bullish bias with the put-call ratio surging to 1.205 from 1.049, the August 4 expiry's max pain anchor has shifted higher to 24,250, indicating short covering at lower strikes. Significant call open interest concentration at 24,600 defines immediate resistance, while robust put open interest at 24,000 serves as a critical demand zone, pointing towards institutional accumulation within the tactical support range of 23,000 to 24,200. The India VIX is currently at 12.16, marking a 1.25% rise from its previous close of 12.01. This rise in VIX, alongside higher market levels, acts as a caution flag for Nifty, implying increased volatility and potential for a fall. The 5-day trend for VIX is mixed. The CPR is positioned at TC 24,300, pivot 24,282, BC 24,265, expecting normal movements in the market today. Gift Nifty opened at 24,412, which is a gap up of 49 points compared to Nifty's previous close of 24,363. This suggests Nifty 50 could see a similar positive gap at the open, potentially leading to a bullish session if confirmed. The no-trade sideways zone is identified between 24,265 and 24,284, where trading lacks clear direction. A move above the breakout level of 24,284 could yield 186 points, reaching 24,469. Conversely, a move below the breakdown level of 24,265 could yield 100 points, reaching 24,165. Previous trading day, Nifty moved 68 points, which was bullish. The weekly move stands at 389 points and the monthly move is 420 points. The close did not sit tight against either extreme, indicating no strong directional carryover signal into today's session. And now, the moment you've been waiting for, today's final market verdict. Indian markets are showing a cautiously bullish bias for the day, driven by several factors. Nifty futures are indicating a positive open, 44.85 points higher than the index close, and we saw significant short covering yesterday. Global signals are also encouraging, with Gift Nifty opening 49 points higher, suggesting a positive start for our Nifty 50. Foreign institutional investors have poured 3,623 crore rupees into the market despite domestic selling, providing strong upward momentum. Options data points to a bullish directional bias with a put-call ratio of 1.205 and strong support at 24,000 and 24,200 strikes. The auto sector has been a strong performer, leading gains and showing good 5-day momentum. However, we must exercise caution. The RAS EMA trend signal for Nifty and Sensex remains bearish, indicating underlying technical weakness.
Also, while Nifty and Sensex closed above their breakout levels, they are below their 200-day exponential moving average. Yesterday's Nifty stock breadth was also bearish, with 26 out of 50 constituents losing ground. Geopolitical tensions, including the US striking Iran and global trade fragmentation warnings, add further risk. Considering all these factors, we anticipate a bullish session today, but with some technical headwinds to watch closely.
And that wraps up today's Trade Vision pre-market report. Don't miss a beat. Hit subscribe and ring that bell for daily updates. If you found our insights valuable, please give us a thumbs up and share this video. We'd love to hear your thoughts and advice in the comments below. Here's to a truly profitable day.